Let me get, there we go. Got the restream up and running. So everybody on the social media, YouTube, Facebook, X, you guys can all see me out there. And then, yeah, I've been pretty chatty in the Moxie room. So great. John, Kay, good to see you again. And yeah, we'll kind of get in through this. Mirza, thank you for making sure everything is up and running. Yeah, I got like three major things that I want to kind of review with you guys today. First off, we know that the market's bullish, okay? But yesterday there was a bit of a pullback, totally fine, totally expected. Um, and I've been saying to the Moxie group that I figured something around the hourly 21 was going to be support. Like let's first, whenever this first starts to come down, let's expect, let's expect. Let me get my Camtasia. I had to restart my computer this morning too. We need to expect price on the SPX is most likely going to break below the 15-minute 50 because I mean we've been straight up for 4 days, and it's about time something's going to happen. So we finally got that. Finally got where we broke through the 15-minute 50, and then I said, okay, let's look at the hourly 21, and that's the orange colored line on the hourly chart. And you can see yesterday we overshot it. Oh, okay, but we closed above the hourly 21. And then this morning, we're sitting right on the hourly 21, and it took another little bit of a dip. And you can see right there, there's a wick. And so it came down, told the Moxie group this morning, I was like, right off the gate this morning, I was like, I don't really have much clarity. I can't really tell what's going on. So give me a little bit. And then the market dipped and then reversed very quickly. And I said, I think that's our signal. And so we put on a put credit spread. So we are selling puts, and it's looking fantastic. So for those of you in the Moxie room, this is our opportunity to kind of review and go over what our trade was today. And then, Vijay, I wanted to make sure that we're going to talk about the spreads and what we're going to be doing with them, how we work them. But you can see this is where we sold the put credit spread. And when you sell credit spreads, you want them to go to zero, ideally. And you could just see it's been a nice slow trickle down like this, and it hopefully continues to accelerate. Now, you don't letting them go to zero can be a little bit risky in case the market does change and go a different direction on you. So usually the rule of thumb is to cash in when you have about 80% of max profits. You can do whatever you want. You can do 90, 95% if you're lucky enough. Or hey, if it's a small move, get 60%, get 50%. Either way, it's pretty great. And so what I've really been doing, the thing that has really helped me with options is being able to visualize them. And this is what I discovered months ago and has allowed me to trade the zero DTE option, is because I can now chart them. I didn't know that was a thing months ago. So that's been a huge revolution for me. And you can see this morning with the puts, I was just like, I don't know. I don't really have a clear picture. And I'm glad I didn't do anything, because look at that spike. Wouldn't have really wanted to ride through that, but I figured that spike was also kind of the signal. I had a mentor, Sue. She would call them Los Dos Amigos, and it's basically when you have two big bars right next to each other, and you go the direction of the most recent bar, which in this case was down. And then you can see price continued to stay underneath the 2-minute 50 and continued to get rejected. And so that's a perfect trend. That's doing exactly what we want it to do. And so everything is nice with that. Yeah, great, Vijay. So let's kind of review some of these things. What the idea is, and let me see. So 50, I think we did 50. There we go. So the idea, what you're doing is when, let's say, we think that the market's going to go up. So what we're going to do, and you can either sell premium, sell options, or you can buy premium, buy options. And today I figured, okay, I think that the market is done going down. It's probably going to go sideways, maybe up a little bit, but I don't know how much it's going to go up or how fast it's going to go up. And I don't know if it's going to go up enough to overcome the theta decay of these zero DTs. Because remember, you're basically dealing with a melting ice cream cone. Okay, it's like Arizona summer, and you're outside and you're trying to eat an ice cream cone, and that is what these things are. By 4 o'clock Eastern, that ice cream is going to be completely melted, and it's going to be a puddle of sugary goo on the floor. And you need to make sure that you have maybe like something trying to keep it cold and move up until that actually happens. So that is what is working against you when you're trying to buy premium, buy an option, but it's working in your favor when you're trying to sell. So given that the market is basically range bound today, yesterday, even Monday a little bit, I've been selling premium because I think that's the better direction to go, because there's kind of no guarantee that the market's really going to rip anything. And you can kind of see that. Like you see that these options, yeah, they're up, but they're just not very up too much. And if you go too far out, they're not going to move because they're just too far out and the market's not going to move that much. So let's sell them. And so what I looked at is basically I said, hey, the market I think was at 59.80 when I decided to do this. So we put on a 59.70, so just below the market. Basically, as long as the market goes sideways to up, these will continue to decay and work in our favor. And so the idea is you are selling the 59.70 put. That's the one that is the risk. That's the risk, but that's also the one that's going to pay you. And for protection, you're going to buy the 59.50 put. So for me, I like to do 20 wide, 20 points wide. You can do 50 points wide, you can do 5 points wide. There's kind of trade-offs in whatever you want to do. For me, 20 is kind of a nice middle ground. And so you're buying that for protection because what happens is basically the distance between the two strikes is your max risk. And when you look at these, you kind of look at it, you're like, $1,000 max profit, but $3,000 max loss. And you're like, wow, that doesn't sound like a good risk to reward ratio. It isn't, but really you shouldn't allow these things to go to max loss anyway. A rule of thumb for me is that you basically take your sold strike and whatever the double is, that is your stop loss. So basically you only lose 100% of whatever max profit you would have had. And so that at least keeps it contained. And you can put stop losses on these things. So just make sure you guys understand that. We never want to go max loss. It's just poor trading if you do that, poor trade management. And so that's kind of what we're looking at. And it's pretty easy when you're just looking at your trading platform. You want to sell one and you want to buy the other, and the computer will tell you what it is and do all these things for you, and basically just learn how to operate your equipment as far as your trading platform. Because like thinkorswim, you press control and then you press on bid or ask on one, and then you press control and you do bid on the other, and it's sell, buy, and it automatically turns it into a spread. And then you can see the ratios and the numbers, and it's all right there for you. And it'll tell you, $5 is the premium, and so you're gonna bring in $5, and you want it to go to zero. Now maybe you'll sell it at 50 cents, buy it back, get rid of the risk, and you've made 80-90% of max profit. Fantastic. That's great. That's what you've done. So for example, with us here, we sold it right around here, 438, and it's down here at $1.03. So we've made about 70%, give or take, because we still have the buy one that we've purchased. So something around there. I just kind of look at this one. I could look at the computer and see what it says, but that's what we do. Now, Vijay, if you have any other questions, let me know. I'll kind of look in the chat, but I wanted to keep showing other things that are happening out here in the market. So remember, I said that the hourly 21 I thought was going to be support. It sure looks like it's going to be support. I think that is it. And the market is correcting with time, not with distance. So yes, we did have a pullback, and so there's some distance, but it's not like it's going to come all the way down to the hourly 50. I just don't see that happening. What I see is basically it's going to do this until it finds support, and then we'll move back up. Now, today's Wednesday, and some of us are thinking that perhaps 60.50 could be a target by Friday. Don't know. We don't know if that's going to happen or if it's going to work, but it's an idea. So we'll see. And it just kind of depends on how quickly this market determines that it's found support and then wants to keep moving up from there. All right, so let's take a look at a few names. So for the Moxie Group, we'll start with the bad news. We had Instacart had earnings, and I guess either they didn't like it or it was a buy the rumor, sell the news type thing. Now, remember, guys, I told you about this and said, hey, I think that this, anything can happen, but we've got a lot of cushion because our original entry was all the way down here at about $34. And then we put another entry on at 40, and we sold half that at 44. So we've already cashed in on a lot of this. And so I'm willing to let it do this kind of move. Like, yeah, it's great, not pulling back. And if you really wanted to have a tight stop loss, we could have been out this morning. Okay. But we have so much cushion with this. And I really think that this thing will keep going higher that I didn't really want to manage it too much, because I always think back about Carvana, where I was trading. The first time I bought Carvana was some here around $11. and now it's up at 244. And I'm really frustrated at myself that I didn't just stick with this thing. And then I tried to keep trading in and out of this. And I was like, man, I really should have just hung on to this thing. And so kind of applying that lesson with cart. And you can see that Carvana, like, look, big pullback, big pullback, big pullback, big pullback. And so since we have so much of a cushion with cart, unless this thing really blows a gasket or something, I'm just going to stick with it, because you can see that Carvana, for as much as it had really big wiggles and pullbacks and waves and stuff, it was still generally in an uptrend. And so that's what I want to do with cart, and we've already taken profits. Okay, so that's kind of the idea with that. And then on the other hand, we have HNSD, which is just going straight through the roof, which is awesome. So it had earnings and it's up. And this is kind of the risk you take with earnings. Hey, is it going to work? Is it not going to work? What do you want to do? But you can see here that we got in at, $3.50, and now it's $6.28. I mean, we're almost at a double. We're almost at 100% gain on HNST from our original entry. So this is absolutely fantastic. We're up, 78%. Yeah, so that's why I'm like, I'm okay with cart, and we already took profits on it and all that kind of stuff. So yeah, this is looking pretty good. And then I think BitX, so Bitcoin keeps moving up, and we decided to do the leveraged ETF of Bitcoin. There are multiple ways to try and do this, and we're up here at 82%. So also very happy with what Bitcoin is doing. We've got actually, I bet you in a few weeks, we're going to have at least 4 positions that have doubled with just stock. We already have Tesla that has doubled because we did TSLL. I'll show you that one. So maybe it gave a little bit back at this point, but it did double. Let's see. Yeah, we're at 84 now, but it was up to 120% at one point. So, call that a double. And Reddit was the other one that has doubled since our original entry. I mean, we're up here at 124%. So yeah, that feels pretty good. And Reddit's kind of the same thing as Instacart. Obviously this one jumped up on earnings where Instacart went down on earnings, but we already took some profits on this one, and there very well might be a pullback coming and setting up. I would definitely expect that on Reddit. Hopefully it's not too big, but looking at Carvana, same thing. I don't want to be trying to slice and dice this one too much. I really just want to look for those opportunities to get back into it, to keep buying the dip whenever this thing happens. So yeah, Reddit's looking pretty good on that one. And let's see what. Oh, and then yeah, we have some other ones that are looking pretty good for us, honestly. I mean, Hims. Here's another big mover for us, and really, what an absolute entry. I mean, we got it right here at $22. I think we got it before the dip, but basically $22.50 is where we got that. I mean, just a perfect entry, and then we're just screaming up through here. So let's see what kind of percentage is that. 30%? Yeah, about 30%. So yeah, thrilled about that one. It's getting up there a little bit, but that's fine. We're in a good market. We're in a good time and experience and all this. So yeah, I don't want to be, manipulating these things too much. We're just going to be along for the ride on most of them. And then also, if you guys remember, we're in Toast. Toast is that handheld cash register thing that you see when you're going out to restaurants, and you give them your credit card and they cash you out. We got in here, and we're all the way up here. So yeah, we're having a good time. Really enjoying this. All right, so let's see. Yeah, sorry, Darren, making you hungry for ice cream, right? Sal, I'll talk to you about that in the chat. In fact, I'm sure some of the other traders in here could probably help you. But basically, you just go to whatever strike you want for that option. You right-click it, click copy, and then you paste it into your thing. But I can help you out with that in the trading room. Now, just as an overall thing, I want you guys to know, if you look at the IWM, and if you look at the higher time frames, this is really what's happening out here. The IWM is making new all-time highs compared to its 2020 highs. So this is really a big deal. Okay, small caps are just on fire, having a great time, and we need to be aware of this, because this is the time that things are really popping off and having a good time. Okay, so those of you over at YouTube and Facebook and X, I did really well in 2020. Of course, everybody did, right? Don't confuse brains for an uptrend, but 2020 was an absolutely incredible time. It only was short-lived, only really lasted about 4 months when this thing was, like, really going crazy. I think we have a little bit more of a sustainable move because if you look how, say, the IWM has been moving compared to how the IWM moved back in 2020, you can see that there's a big difference. 2020 was just a massive bubble that blew up like this, and inflation happened, and then the Fed was like, "Oh, crap, we gotta stuff this genie back into the jar." But now this is more of a warm up. This is a more reasonable market. This is longer lasting, and it's less of a oh crap, what's happening? And we got zero interest rates down to zero, and we got a bazooka of cash coming from J Powell. Different circumstances. So this is just like a really good, normal, bullish market. So I think it's going to last more than 4 months. Hopefully, fingers crossed on that one. So that being said, guys, anybody who's out there, we already have everybody in the Moxie room. You guys are having a field day. This is my kind of stuff. This is where I excel. The small caps, seeing these things, seeing these stocks just kind of go crazy. I had people in the central room who were also trading hymns, and they're like, "Dude, what do I do with this?" It's like, keep going. Like, let's keep going. So, yeah, I've been trying to tell everybody out there who is not already part of the Moxie rooms, like, this is where I'm good at, and this is the market that we want to participate in, and you're going to be missing out if you aren't here. Okay, so uh, just make sure you take advantage of this. It is 2020 all over again, a little bit more constrained, which is good because it means it'll last longer. We're going to have lots of time to trade lots of really great names, and there are many, many names that are just starting. You can even look at Roblox. Look how long that Roblox has been in hibernation right there, and it's now starting to break out. Okay, we're going to have a long time to work with this, and it's just money will rotate around. When they get too extended, take some off. We'll rotate it in something else. We're having a great, great time. Another one that I'll kind of just put out there, SoundHound. And it had earnings. It's down on earnings. That's totally fine. It was getting a little bit extended anyway. And honestly, the fact that it's down on earnings means that that'll give us an opportunity to get into something like this. But a lot of these names have been incubating and hibernating for weeks, months, years, ever since the 2020 bubble popped. And now we're starting to see some action. Okay, so really, I just want to keep emphasizing that this is the time to be in the market. Let's be aggressive, and let's be active. So for those of you who don't know me, I'm doing a combination of zero DTE options, like you saw this morning. We're selling calls, we're selling puts, we're buying puts, we're buying calls. We're doing all of it for zero DTE, and we've got just an absolutely full plate when it comes to stocks. I think last I counted, I had to update my stops. We've got like 10, 10, 11, 12 stocks. So it's a full load. And if you guys want to be on margin, that's up to you. You can manage your own accounts, but yeah, you're looking at things like HNST, and clearly these things are well on their way to going higher and just absolutely nailing the entries. That's just a perfect entry right there, and now it's up here. So yeah, this is going to be a good market. So guys, very excited. Let's make sure we keep doing this. For those of you who are in the room already, let's keep going it. And love that you guys are very active inside of the chat. It's great, keeps kind of entertaining and engaging, especially for anybody who might be new. So come on over there. And again, for those in the Moxie room, I'm going to be back on the mic in the central room. What is it? 1 o'clock central, 11 o'clock my time. So I'll see you guys again there. We could probably actually start looking to cash out on our put credit spread. Maybe we can wait a little bit longer because it seems like it's going to be going our direction most of the day. And then let's go in there. So yeah, yesterday we made 175% selling credit spreads. And today we'll probably make it at least 80%, and we'll see what else we can do. All right, guys. So thanks again. I'll see you guys in the room, and we'll see you in the central room in 1 o'clock central. Thanks again. See you soon.